let me explain to you what I think is going to happen in the market,
Mm.
right? Just in terms of fundamentals, what's is really going on in the property world and where I see things kind of rolling out, right? There's a number of different factors that we've kind of got to look at and we've got to focus on. So factor number one, Australian sense of security and safety is really held in real estate, right? So what we've seen is that we've seen the share market get smashed. We've seen super funds get smashed. We've seen unemployment rate go up. And so everything's been thrown up in the air for a lot of people, right? And so the government doesn't want property to kind of fall, because this is that sense of security and that people actually have. And in order to be able to re-stimulate the economy, they need confidence. So this is why they've come around and they've gone and put all the stimulus in place, which basically means is that we are now, people have the 6-month holidays. So no one actually has to sell at this point in time. Like no one actually has to sell because we're on these 6-month holidays in the marketplace right now. Now, the other thing that we've got to factor on here is that number 3 is that we're in record low interest rates. So the interest rates are so ridiculously low. You're getting interest rates at kind of 2.19%. Like one of my clients is fixing at 2.19% for 2-3 years at this point in time right now. And so it's cheaper now to go and buy somewhere to live than it is actually to rent. Okay. So again, for people having to actually sell, I mean, like, they must be in really, really dire situations for that to happen. Now, if you hear about all the media stuff that's going on right now, you've got all this media malarkey going on. Oh, well, the property price is going to drop by 30%. Well, in order for the property price to drop by 30%, then a large proportion of the population have to all agree to sell their property for 30% less than what it's actually worth. And I don't know anyone who's willing to do that, right? En masse, especially en masse, right? So number 5, what we've really got to consider, which kind of links into that, like selling en masse at 30% down and, selling property for 30% less. A lot of the conversation is, well, unemployment's going up. Well, they're talking about unemployment is going to rise to 10%. But what that really actually means is that 90% of the workforce is still actually employed, and the people who are still employed have more stable jobs and tend to have higher incomes. And so if there are going to be drops, it's going to happen in areas where there's a low socioeconomic area. So what that means as we're kind of thinking about this is we're mitigating, then we've got to focus on where we're going to be buying quality property in quality locations where the socioeconomics all stack up. And so that just becomes our overall due diligence process that we want to be focusing on.
Yeah. Number
7, supply is about to fall off the cliff, right? In such a big way. There was an article in Fin Review the other day that we're going to be in Sydney. It's going to be supply levels down to 1953.
Wow.
And I think I showed you guys the chart before talking about the Melbourne and Brisbane apartment markets, the approvals that are actually coming through. The reality is they're just not. And we don't know when we're going to merge in this. Like what's going on is that we've got the health stuff which is happening, but the economic impact is definitely going to last longer than the health side of things. So it might take us even 1 to 2 years to emerge out of this period of time right now. But in that period of time, not only was the supply already declining in such a big way, even before the COVID stuff started coming around, but the COVID stuff has just kind of accelerated this overall process because, a lot of projects that were being planned are just not getting off the ground, or they're pausing them and things like that. And so supply is going to be constrained at such a massive level as we are moving forward. So what we're starting to see, and also when we're talking about on the ground, because what happens is that the media, like all these uneducated opinions who are just there to spread like panic and despair in the market to sell advertising space, that's a very different conversation than what's actually happening on the ground. Like developers and vendors are not discounting in big, big ways. They're giving some incentives and things like that to be able to stimulate demand. But like the head of our investment agency, Sam, and the rest of the team, like they reckon that it's going to last maybe 3 months. And we're already seeing that, like Melbourne open homes started opening up last weekend. Now, one of our coaches down in Melbourne, just down the road from her where she lives, 25 people turned up for an open to inspection, were lined up down the street. And auction clearance rates are opening up. Like, if you really look at what's going on the ground at this point in time, there's no big discounting. There's no drops happening. There's none of the stuff that everyone is talking about is happening. The thing we need to be mindful about is when this stimulus, the 6-month holiday comes out, what's going to happen then? My personal opinion is that the government's going to go and put more in, which is why they're currently talking about, doing something with interest, stamp duties and things like that, right? To make it more buyer attractive, to kind of keep stimulating the marketplace. And number 8, the government wants to stimulate the economy again to grow, and what they're going to use is the construction industry to be able to do that. So this is why all the major infrastructure projects in the country are still going ahead, right? And that they're announcing more. Even just today, I think it was like $1.8 billion was announced for more infrastructure projects going in Melbourne. All of my clients and buddies that are in the construction game, it's business as usual for them. They're busy, like nothing has changed in any way, shape or form. And in order to pull Australia out of the overall economy, the economic slump we're in, they're going to use construction to do that.
Mm.
And number 9, I'm sorry I'm ranting here, but this is really important. Number 9 is, so the construction game, number 8. Number 9 is immigration. Now, although our borders are closed right now, what's going to happen is that as we start to open up, Australia is considered to be a safe haven now, especially considered how the whole COVID stuff played out in Australia, which really it's fine. It's had a bigger economic impact than it has in a health impact. So the immigration is going to be considered, Australia is going to be considered a safe haven, right, to the rest of the world. And already there was massive demand for people wanting to move to Australia because of, nice place to live and all the other stuff going on. And Australia is also going to need to open up the borders because we need population growth, because we need productivity, because Australia doesn't make anything. We just have agriculture and we have resources, and that's about it. So I expect the borders to open up in a very strong way, in the next kind of 12 months, which is going to flood population coming into Australia when we're already have this massive undersupply, which is getting even worse. So to me, I sit there and I look at all that and I go, I don't think the property market is going to fall at all, like en masse. It might happen in a few select areas, but like when they start talking about the Australian property market, I don't know, it's just ignorance, because there's no such thing. The market is made up of sub-markets within sub-markets within sub-markets.
Yeah, exactly.
Sorry about the rant, but does that make sense?
Yeah, that's good.
Yeah. That's my perspective behind it. So I reckon, and also property, it's a longer term game. So what we've got to be thinking about is that if we're buying property in today's market now at today's pricing with some of the incentives and cool stuff that's going on, if we're holding that in 2 to 3 years time or 5 years time, are we going to be happy? And I think the answer is going to be absolutely. Anyway, that's my piece.
Sounds good.